Hi, I'm Dad the engineer. Years ago, I was conducting an employee review. I got to the end of the performance evaluation section and informed the employee that they were getting a fairly substantial raise, about $14,000 if memory serves. I was expecting them to be happy. I was not prepared for what happened next. They were upset. It wasn't that they wanted more money, it was that they were concerned about the financial implications of their raise. What they said shocked me.
That income will put me in the next tax bracket, and I will make less than I do now.
Again, I was shocked. Surprised, too. How could they so fundamentally misunderstand the nature of the tax bracket system? Well, that was years ago, and I've heard it, or variations of it, several times since. Here are the US tax brackets for 2025. If we pick an income of $103,000 for a single filer, I guess the assumption is that the tax is 22% of $103,000, which is $22,600. That taken from $103,000 is $80,340. To extend the example, if they get a raise to $104,000, the tax would be 24% of $104,000, which is $24,960. That taken from $104,000 is $79,040. So a raise of $1,000 would result in $1,300 less. That's terrible. Except that's not how any of that works. You see, there's a difference between your marginal tax rate and your effective tax rate. Your marginal tax rate is the rate of tax that you pay on the last dollar you earn in a tax year. The part of that requires a little explanation is that every dollar of your income is taxed at the rate that applies for that dollar. Here are the tax brackets again. You can see in the chart that the tax rates apply to ranges of income, with that 10% applying to the first $11,925 regardless of how much total income you have. That same $103,000 of income is actually taxed like this. You'll notice that this example shows the difference between your gross income and your taxable income. In your specific case, you should either have the standard deduction or an itemized deduction, whichever is higher. This example assumes the standard deduction, resulting in $88,000 of taxable income. The resulting tax calculation is as follows, resulting in a total tax liability of $14,274. The effective tax rate is the average rate at which your income is taxed, and in this case is 13.86%. That's much lower than the 22% marginal tax rate. In contrast, this is what the tax is for the same person if they get a $1,000 raise. The taxable income increases by $1,000, resulting in an additional $1,000 of income considered in the 22% bracket. The total tax liability is $14,481, with an effective tax rate of 13.92%. For those keeping score at home, the effective tax rate increased by 0.06%, and actual tax liability increased by $207. The $1,000 raise then results in a $793 increase. The keen-eyed of you may have noticed that because of the deduction, no part of the income was actually taxed at 24%. Even if we adjust our example to place the two at successive marginal tax rates, it won't change the outcome. This applies to any type of regular income, be it tips, salary, overtime, or bonus. You don't have anything to fear from taxes by making more money, as there aren't situations where making more money will result in you getting to keep less of it. Instead, you will just have a higher effective tax rate. That doesn't mean that there aren't situations where making more money can be bad, as there are income cutoffs for things like Medicaid, ACA subsidy in the form of the premium tax credit, earned income tax credit, child tax credit, American Opportunity Tax Credit, lifetime learning credit, Roth IRAs, student loan interest deduction, savers credit, Social Security tax, as well as state programs like SNAP and CHIP. If you didn't know how tax brackets worked before, now you know something new. I was encouraged to make this video because people in my life said that nobody actually taught them this information. I will continue to make videos on similar financial topics. If you found this video to be helpful and would like to see more like it, please like and subscribe. That encouragement would mean more to me than you know, as I'm just getting this thing started. If you would like to contribute some feedback or have questions about this or other tax topics, please engage with me in the comments below. If, like me, you're a little old school, please check out my website, linked in my bio. Thanks, and have an awesome day.